In today's episode, we're going to be focusing on the most parabolic phase of the bull market that occurs after every single halving. We're going to be focusing on these phases so that we better understand what to expect in the next post-halving parabolic phase. So subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like these going forward, and let's dive right into it. So let's break this down, because after the halving in 2016, we saw Bitcoin rally to new all-time highs within 518 days. But after halving in 2020, we saw this stretch out a little bit more to 546 days. So what's very just simple to do is, if we are to see Bitcoin top out 518 days after this April 2024 halving, that would see us top out in mid-September of 2025. But if we were to see price top out 1 month later, that would see us top out in October, mid-October 2025. So it gives us generally a period of around September, October 2025, later on in 2025. And that really is quite similar to what we saw in November 2021, where we peaked. Right, this is where we peaked in the previous cycle, November 2021. In this cycle here in 2017, we peaked in mid-December. So it's quite interesting to see how at the end of the month is quite important in terms of seeing a ultimate peak. And when we think about 2017 and also 2021, really important to notice how it's every 4 years. So 2017, 4 years later, we peak in 2021. And of course, in 2025, it's going to be 4 years later as well. So roughly speaking, we see that Bitcoin tends to top out 4 years later compared to the previous top. And that's no coincidence, because the halving occurs every 4 years, and we have inbuilt Bitcoin 4-year cycles as a result of that halving. So no surprise there. But the bull market peak should be occurring later in 2025. And of course, you can hold until the very peak and then wait until 518 or 546 days after the April 2024 halving. But of course, that's where maximum financial risk is occurring, and that's where peak greed, extreme greed, and FOMO and over-optimism and over-belief in the market resides. So just trying to snipe that absolute top is not the way to go about it. It's better to dollar cost average as we get closer to those 500 days plus range, so that we just dollar cost average out of the market and not put too much pressure on ourselves to try and absolutely snipe the top. But in the meantime, though, we really need to focus on the phases that lie ahead. And we have the pre-halving period phase, which is this orange phase right over here. It's going to be 120 days long, so 4 months. It's during these 4 months that we could see some sort of retracement in Bitcoin's price action, because we saw retracement not only in 2019, but we also saw retracement in 2015, 2016. So even if people are saying that this 2015-2016 cycle is more similar to this one, it still implies a retrace, and the retrace we saw at that point in the cycle was minus 25%. Here we saw minus 38% at the same point in the cycle of around 180 days before the halving. So the pre-halving period is where we see lots of volatility towards the upside and downside. That's something that lies ahead still over the next 4 months. Then we have the pre-halving rally, which is 2 months before the Bitcoin halving itself, and we tend to see either a V-shaped reversal like we saw in 2020 just before the halving, or we just see a massive breakout towards the upside. Whatever the situation, whether we break out from a reaccumulation range and rally to new highs here, or V-shaped reversal, and of course in 2020 we didn't rally to new highs, apologies, but still a strong uptrend. That's something we could expect 2 months before the halving. And after the halving, or during it, this dark red, dark blue circle here, a pre-halving retrace. So this pre-halving retrace also lies ahead, where we see a pre-halving retrace around the halving. This is where loads of people are buying the news and wanting to sell in anticipation of that news, and also trying to capitalize and profit on the hype here. It's this psychology that prompts this retrace, but then we recover afterwards. So this pre-halving retrace gets us into this post-halving resistance phase right over here. This is the reaccumulation phase, and we see lots of sideways price action in this phase, but that's in preparation for the parabolic uptrend. And it's this parabolic uptrend that roughly, as a phase itself, it lasts around 380 days. So while we look at this chart and notice that after the halving, measuring the halving to the Bitcoin bull market peak, that's 500 plus days, right? In each case, here it's 546 days, here it's 518 days. But if we really just measure the parabolic phase once we break out from this reaccumulation range, right over here, then you'll notice that that phase lasts around 350 days plus, 380 days roughly speaking. So we'll see reaccumulation after the halving, make no mistake about that, but then we'll have around a year's worth of price action towards the upside. And that makes sense, because if this, for instance, is going to consolidate from April to around a few months like September or October, then it makes sense that 1 year after that, 380 days roughly speaking, we're going to see a peak, and a peak would be in mid-September, mid-October. So it really does depend when we break out from this reaccumulation phase, because we notice how this reaccumulation phase is quite important to dictating how long this parabolic uptrend is going to last. So we can see here that after the 2016 halving, this period lasted a little bit shorter than this period, and so is extending by a little bit each time. So the longer this reaccumulation goes on for, perhaps the shorter this parabolic rally will be. But nonetheless, this parabolic upside, this phase in of itself, that's going to be around a year or so. And after the halving, measured after the halving, is 518 days to 550 days. And the last thing to really mention here is that the halving, as an event, we don't actually know when it's exactly going to happen, because that really does depend on fundamental things in the blockchain itself. But measured from that moment, because that's where we're saying at the moment it's mid-April, but it could happen 1 week earlier. So in that case, we'd have to adjust this by 1 week earlier, right? So as a result, it's not worth just holding and trying to play this picture perfect 546 days or 518 days, because we have some errors in measurement. For instance, this was shorter by 1 month compared to this bull market, right? So that's something to bear in mind. Is this extending by 1 month at a time? But at the same time, the halving event could be 1 week earlier. So we have to make that calculation. We have to make those adjustments, which is why it's really important to have a dollar cost averaging strategy where you're averaging out of the market as price goes up towards the upside. So that's something really to keep in mind, that there are a few things to keep tabs on in terms of the bull market from halving to bull market peak, 518, 546 days. And at the same time, how long is this reaccumulation range going to last for? And when it breaks out, well, at which point in the market are we going to be? Could it be 1 year from that point? That's also really important to bear in mind. But generally speaking, later in the year of 2025, that's going to be Q4 or just before Q4, end of Q3. That's when we can expect a bull market peak for Bitcoin in the next bull market cycle. Check out the top right hand corner for more videos, and I'll speak to you in that one. Subscribe to the channel, like this video, and I'll speak to you soon.